The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Hey, how about that? Welcome to the May 21st wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great evening, and let's just make today a great trading session. My outcome for the next hour or so is to teach you how to master the tools for trading, and that includes the tools of the mind, because when we can master the tools of our mind, well, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD. We'll talk about swing points, Gartley patterns, various candlestick signals that the bulls and the bears, what I call the sign makers of the market, what they create for you and I each and every day are signals. And these signals and patterns are what I place into a category that I call tactical tools. And knowing how to identify these signals, knowing how to identify them on a chart, it's really important. But you see, the key to trading and investing, the real key to get your money to work harder for you than you do for it, it's to have a strategy. That's what I call mastering probability. Because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. So, I don't want you to confuse the term failure and losing money as the same thing. Oftentimes people do that. In trading and investing, money is spoilage. You're not going to get every trade right. But what I want you to do is I want you to just simply, and this is like having leftovers that you throw out, on garbage day when you clean out the refrigerator out there. How many of you do that? When you're throwing out that, you're throwing money out the door. So it's just spoilage. That's all it is. Realize that. And look, as long as you use stops, as long as you have a strategy, then spoilage is just a part of managing money. So today and every day, let's think like a strategist, because strategists, they slay the tactician all day long, even Godzilla. So let's begin our day by getting into a peak physical state. Put those shoulders back, taking a deep breath, and let's go take a look at one of our tools. The tool I call, you find what you're looking for, good or evil, problems or solution. Reality is often a matter of personal perception. The way two people respond to the same set of facts and circumstances, well, it reveals that each and every time. Take a look at it like this. In the markets we trade, we see it every second of every day because one person is selling, one person is buying. If price is moving higher, one thinks that price can't go any further, while another believes it's a great time to come in. Yes, folks, you see, the only thing that we can control in life is the meaning that we give to events. Imagine the following scene. You've seen this before. You've probably seen this before. Two friends are having dinner at a restaurant. They overhear a couple at the next table. Neither friend speaks of the exact situation until later. Seems kind of courteous to do so. And then one says to the other, "Can you believe the nerve of that man, telling her what to eat? Why, he treated her like a child." Well, the response from the other person was, "Well, the menu was in French, and I think he was simply helping her decide what to order." You see, each interpretation, it's based on a perspective of the individual, and therefore reality is often a matter of personal perception. The great teacher Seneca, he once said this, "Eyes will not see when the heart wishes them to be blind." So what does that wisdom mean? I think it means that wisdom takes courage. You see, it takes courage to open our inner eyes, the eyes of our spirit, the eyes of our heart. We do this by choosing to look for the good in all situations. Just try that for the entire day. Look for the good in every single situation. That's accomplished by deciding to place our attention on workable solutions to problems rather than focusing on what we perceive as being wrong out there. Yes, folks, the solutions lie from within, not out. In looking up, not down, and looking for the good, not the so-called evil. And looking up, we direct our vision away from what I call our limited belief system. The good news, folks, we find what we're looking for, good or evil, problems or solutions. I say choose your path wisely. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow Futures trading up 60 points. They're trading out at 16,397. S&P Futures up 7 points, trade at 1875. NASDAQ Futures up 9 points, trading out at 3605. Russell 2000. Up about 7 points. Of course, I have a 10-minute delay on that. Euro is down 34 ticks. King dollar up 9 pennies. Trading out at $80.18. Goldilocks back $4. Trading at $12.90. Silver down about 20 cents. Trading out at $19.38. Light sweet crude. Black Texas tea up 83 cents. Trading out at $103.16 out there. Our call number is 877-927-6648. Feel free to give me a call. Happy to take a look at your stock chart, answer whatever question I possibly can. And where do we begin our day? You know, we ought to begin our day probably taking a look at the Dow. Let's take a look at the Dow because we're going to take a look at 2 weak links out here. That's where I think we should begin our day. So that's what we're going to do. And we're going to take a look at the Dow and the Russell 2000 out here. So let's take a look at the Dow. Let's put up a 120-minute chart on our screen. In fact, let's put up a couple of charts. Number one, what the Dow did here yesterday was broke through that little consolidation. Remember, yesterday we were talking about the this wide-ranging bar right here that took place at 12 noon. That's from the high of 16,488 down to the low of 16,378. And price had really traveled inside that consolidation area, small, short-term, very short-term consolidation area. And not so much the importance of a consolidation. The B point actually was the following of an A to B equals CD down was the following candle. But it's this wide-ranging thrusting bar here that was really important out there as a contained price. Well, price broke through that pretty equivocally at 2 o'clock in the afternoon out there. And I went for my walk. Things seemed to be relatively stable. Really, it was between 12 and 2 because it's a 2-hour chart that we're looking at. It came back and it was like, what the heck happened? Market took off to the downside, most definitely without me out there. And it did so relatively quick because at 2 o'clock, after 2 o'clock, things got to where, if we take a look at that 14-period relative strength indicator, if you're watching us on TigerTV, price got to where? Got to be what? Got to be oversold. Now, the interesting thing is price was moving down there, truly cascading down there. If you're watching our chart out here, I'll draw the line, and I'll go ahead and blow it up on our screen. Let's take a look at the low that was made, that specific bar that we were talking about at 12 noon. That was on May the 15th as price got down to 16,378. That relative strength reading, 17.5 out there. Take a look at what the reading is here. I'm going to go ahead and I'll make this a nice little black. So there we go. Come on. I got a little bit of a lag time here for whatever reason. We'll make that a nice big black line. So price was actually moving lower on less relative weakness out there. That's always got to make you say, something to think about. Here's the problem, though. Just like we experienced inside of the Dow futures contract, this candle session at 12 noon, so between 10 o'clock and 12, this candle session here from May 15th, guess what you got yesterday? You got another one. So in essence, you really could, whoops, I didn't mean to do that. I didn't even know how I did that. In essence, what we've got is another little box out here. So the real resistance area for the Dow, let's go ahead and make this one red out here. So we'll make a little red line out there. The real resistance area is going to be in this bounce that we've seen here in the market. If this is more of a bounce to or rally to sell, or is it more of a true rally out here, I'd have to say that the resistance area, the top of that session, that ended at 2 p.m., that price level of 16,430 is probably where we see whether this is a rally failure or not. Now, of course, you'd have to see price, in fact, get above that. You'd like to see price if this is a market that is going to rally. You want to see price get above that session back there on May the 15th. But you got to take one little bar at a time here right now. So at this stage, if we just take a look at what's transpired since that little down thrust coming off the high at 4 o'clock in the morning, I should say, during that session at 16,505 down to yesterday's low. Well, you see you're above the 0.382 retracement. And the top of that bar, the interesting thing about that is that it also happens to be really the exact 0.618 retracement. I don't know how Leonardo figured that out. Well, he did it by watching bunnies, in essence. I mean, I think that is the actual story behind it. So 16,431 happens to be also the top of that price bar which is 16,430. That's a key area for us to be watching right now. Well, Dow futures at 16,401, and if price can get above that, well, let's go see what that actually means. How do we find that out? Well, let's actually just take a look at our TAS signal box. Let's change over here as we take a look at the Dow futures, and I don't mean to just belabor a point or anything like that, but really this is all about navigating these markets and taking a look at all the different wonderful tools that we have available to us. Now, inside the TAS signal box, this is a 120-minute chart, so we're keeping it consistent. It's so-called unfair low, the place where it's okay to be short. Well, that was at 16,388, and we are trading above that level here right now. Of course, this is a 2-hour chart. The 2-hour time frame has not come to an end. What this does say, remember we were talking about 16,430-ish? This actually says the resistance level on this bounce here is more likely 16,466. That's the key area to be watching on the 120-minute time frame. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, TAS Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAS Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAS Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So now let's switch over and take a look at the Russell 2000. So we looked at what's going on inside the Dow. We have identified important areas of resistance that price needs to overcome in order for this rally that we've seen here this morning to become nothing more than a failure, nothing more than a selling opportunity for the bulls in the market. If we take a look at the Russell 2000 now, I've got the 120-minute time frame chart up on my screen here, and you see a nice little descending price channel. Again, the channel lines on a 120-minute chart are going to be different than the daily chart, just simply because of using different bars that are forming there, and we're using either the close or the open of bars. We're just simply trying to use the largest number of contacts that visually is pleasing and makes sense with regard to the containment of price. And, of course, we're always looking for those areas where price has moved into an oversold or an overbought condition, because those are going to be extremes that are going to break outside of those either rising or descending price channels out here. What we can see right now is that yesterday, it took place here at 11:30 in the morning on May 19th, when there was a nice wide-ranging bar as the Russell 2000 was really taking off topside. It formed a real nice little Gartley sell pattern. Of course, as you're coming into those areas with a wide-ranging bar, really it's not a sell. Markets don't end on sells, and on wide-ranging bars. And most certainly the Russell 2000 didn't end on that, because from 11:30 in the morning on May 19th all the way up until the time frame of 9:30 on May 20th, so that was a pretty good amount of time, the market just simply moved sideways out there. And then it also turned loose. In this case here, the Russell 2000 into the 9:30 to 11:30 time frame out there, and this was yesterday. Price broke back inside the rising price channel. Now remember here, every Gartley pattern has 5 potential outcomes, and one of those outcomes is 0.382, the other is 0.618, and then a third outcome, 0.786. Well, it almost got down to the 0.786 level, which is 1086.50. What it actually got down to yesterday at the close, or about 1:30. Yeah, 1:30 in the afternoon. It got down to 1090s. I'm sorry, I'm off here. It got below that. It got down to 1088 versus 1086. So not too shabby out there. So it achieved that third level. Now what it's doing, if we take a look at the bounce, and I've got a little bit of a delay here. Just don't really feel like paying the extra money for that feed. And if we take a look at the bounce that is underway here as we speak right now, it's above the 0.382 retracement level. It says 1105 is its next target. But let's go take a look at the market profiles. Let's stay within the 120-minute time frame out here for the Russell. Let's go see what we've got. And inside the Russell, it says it's going to have resistance at 1103. So the key area is 1103. If you were trading 1104, if you were trading a 120-minute time frame out there, you were bearish, you would want to see price, in essence, on that 2-hour time frame hold that resistance area. Likewise, if you were bullish, you would want to see price get above that. If it gets above that, then it says that the likely next resistance area, target area, is probably in that 1118-ish type range out there. If it fails right at 1104, what it's really likely doing is setting up an A to B equals CD to the downside. What does that look like? Well, your A point would be this high that came in at 8 o'clock in the morning yesterday. That's our A point. Your B point is going to be the low that came in at about noon on May 20th. Well, I guess May 20th. And the C point, unfortunately, this system doesn't let me grab the C, which would be 1103. I'll just grab the high of this candle. So it would take it down to about the 1074-ish area. That's, in fact, if this area holds as resistance. So the key for us to be watching inside of this weak link out here, so-called weak link, is going to be the 1103 area. Why do I say so-called weak link? Look, what the Russell 2000 has done here, both on a daily and a weekly time frame, this is really important for us to be watching, because if we take a look at the weekly time frame out here, what you'll see is that prices move down into a rather significant support area of its market profile, and that's at the 1101-ish range, right where we're trading at right now. And so far that has really held. 1102 is the actual number. 1102.20 is the actual number out there. And that area, for the most part, has really held. If it gives way, as we said, if we were to see it close below the April 14th low out there, and that's at 1109.80, that'll send up a move down to the 1037 area. But otherwise, on the weekly chart, it's up against a pretty decent area, potential decent area of support. And if we take a look at the daily chart, well, it's a daily chart too. Daily chart too at 1092. So the Russell 2000, which has really been a weak index here, what it really needs to do is break this little trend line. That's the white line on my screen here. Has not done that. So the trend inside the Russell, it's still to the downside. 877-927-6648. But it's probably need a little bit of help from its friends, the bulls. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Bulls out of the gate. You got the Dow up 67 points, trading out at 16,442. S&P up 7, trade at 1879. Composite up 11 points at 4108. Russell 2000 up 5 at 1102. Apple down 84 cents. Microsoft up 10 cents. Google up $3 and change. Leading the charge, the upside, it's the little blue box. Tiffany and Company out with the numbers before the bell. Up 9% right now, up $8. Netflix up 5%. I'm sorry, 5%. Up about 1.5%, up $5. Kiwi PLC. And I was reading the other day that kiwis are very good for you. Can't remember what wonderful health thing that they do, but kiwis are good for you. Might have to eat a few more kiwis here and there. Up 7% right now, up $2.47. Discovery Communications, DISC. K is the ticker symbol, up 4%, up $2.77. Amazon up a couple bucks. AstraZeneca up about $1.86. To the downside, PetSmart. PETM off 7.5%. Maybe they were out with numbers as well. Let me see here. Yeah, they were. They generated $1.73 billion versus $1.71 out there. So not too bad for the first quarter. May be guiding low. Let me see. Net income $103 million versus $102. So relatively stable. No stability this morning in the prices. It's down 7% off $4.60. Intuit off about 3.5% down, about $3. Salesforce.com off 3.5% down, $1.70. eBay off $1 out here. Lowe's off 70 cents. Mercado Libre down 59 cents out there. All right, well, we can see that resistance area inside of the Dow right now. It gets a 2-hour chart out here, so. But at this stage, and that 2-hour chart is going to end in about 24 minutes out here, but you've got price up above that resistance area inside of the Dow futures as we speak. Let's go over, we'll take a look at the 30-minute chart here for the ES Mini. So just to give you an idea, a breakout would be occurring today, in my opinion, if we see a move above this red descending trend line out here. So, again, it's a 30-minute chart. And what I'm doing for that trend line, I'm just going back to the high at 11 o'clock in the morning. That's out at 1898.50 out there. And from that high, another good point to go ahead and use is the high that came in at 4 o'clock in the morning on May 20th out there. And if you use those levels, pretty good area that should act as resistance. So and you can watch on the 30-minute chart out here. You can see that price is moving into that extreme overbought condition. So the expectation as we are getting out of the gate nice and strong here is when do the bears start to show up? From a trend line standpoint, it says the bears are just getting ready to load their guns right now, and we'll see how this plays out right here. Staying above 1876.25 for the day. That is nice and bullish out here. So it's really going to be, and again, it's a 30-minute chart that we're looking at, utilizing these levels here of overbought and oversold, using the 14-period relative strength index out there. It's a beauty. It's absolutely a beauty out there. So that's now it's also, we took a look at the Dow, we took a look at the Russell. We could identify now in this case we looked at the 30-minute chart versus a 120-minute chart. And you'll see if we switch over to the 120-minute chart, let's just do that for you. You'll see, again, staying with inside your time frame and trading with inside there is important to do and to filter out the noise of what's going on shorter-term time periods, because you can see on the 120-minute chart there we are not near the overbought territory, and therefore if you were trading on that time frame, it's got more room to run. Yesterday's move lower, big wide-ranging bar. We are up above that level right now. That began at 2 o'clock in the afternoon. No, it began, at 12 noon, and that high was 1877.50 or at 1879.50 as we speak right now. Now, that down thrust had about 400,000 contracts during that time period, of course. You can't really take a look at the volume right now because it's just not a fair equivalent when we do take a look at the volume out there. Let's take a quick peek here at gold, silver, light sweet crude, and then let's go check in on some of these stocks that are popping and dropping out here. Let's go take a look at Goldilocks. Again, gold is back just a bit this morning here. More so what's so unusual, gold's down $6.50. You can see the sideways consolidation box, so it should find support somewhere down around the 1268 level. And if it doesn't find support there, more so, if it were to close below the price level of 1277.40, I would, my intuition is we'll see a really quick cascade move down to the 1217, 1186 type area out there. But that's going to require getting below a level that is acted as support. So the interesting thing about gold here, really, really tight, narrow trading range out here. You know, if we were down at lows, that would be one thing. You know, we're not. I mean, gold is not down near any of its lows here. And so it's like, what the heck is going on? And I don't know the answer to that question, but I do know the different patterns that are out there that we just need to focus on and pay attention to. So that is cool. If we take a look here at silver, really the same kind of a setup out here. Of course, silver, much weaker than gold, still being contained within its larger descending price channel out here. Not a ton to report to you on there. Not the same case, though, in the case of light sweet crude. Black Texas tea up 90 cents right now. Trade out at 103. Of course, you know that what the heck? Do we switch contracts here? Is that the deal? Why don't I? What's going on with my system out here? Give me a moment to pull this up. Let me just do this real quickly. And that is I probably have it in my system out here. Give me a moment to do this. My apology for not having my charts here updated. I'll tell you what, well, during the next break, I'll get my charts updated, and we'll come back to light sweet crude, and we'll take a look at it. Let's go take a look at some things here that are popping and dropping in the session out here. So lead the charge to the downside. Let's go see what is weak this morning and where things are headed to, and that is PetSmart out there. So for all of you pet owners, you're not buying enough. Actually, it looked like revenues and profits were pretty normalized there. TM is the ticker symbol out here. Ooh, let me refresh this. That's a big move to the downside with some pretty good volume here this morning. But let me update this chart. Make sure I've got things truly updated. I don't know that that's really it. Yeah, there we go. That looks a whole lot better. Well, it doesn't really look better for PetSmart, but it is the third gap down here recently, and could in fact be a three-gap play inside of PetSmart. It's actually a fourth gap down, but this one thus far is the largest, which is what you need inside a three-gap play. So if you take a look at, for example, the first gap here in PetSmart, just to give you an idea what you're looking at, this PetSmart gap down on October the 9th, fairly small gap out there. The low of the October 8th session was 73.83. The high of the following session, 73.46. Pretty small gap. A little bit larger one, the second gap out here. This took place on January the 6th as it gapped down. The high of that session was 70.53, and the low of the prior session was at 71.74. The third gap that took place was on January 15th. But see, that gap is smaller than the than certainly the prior gap. And in a three-gap play, the third gap needs to be larger in both price as well as percentage in order for it to qualify as a three-gap play. So we can take the one right out here from January 6th. We can take the one here from January 15th, and then today's says, hey, that does qualify as a three-gap play. Now, the interesting thing as I went back further left on my chart out here, what's interesting about PetSmart, let's go draw the lines across the this chart out here. It didn't get all the way down to the swing point low out here. That's got some. This is where there was a breakout session that took place. So let's draw the lines kind of across this area here, and that's where it's traded into. It's traded into an original breakout session. That's where I've got the red lines. Let's go ahead and take a look at the volume on that breakout. Was on May 23rd. 2012, how about that? Exactly 2 years ago is where prices come all the way back down to. And the volume on that trading session, 7.5 million shares. Well, it's going to have more than that kind of volume, or appears to that it will have more than that kind of volume today, because it's up with 2.5 million shares with only 13 minutes worth of trading taking place. Now, let's take a look at the A to B equals CD to the downside that it's actually confirmed here this morning. And that pattern looks like this. The A point is the high out here from right around October the 1st, 2013. The B point is down here on January 31st. The C point is up on April the 3rd out at 70.48. So fairly close to a 1-to-1 A to B equals CD to the downside that it's completing. But, man, you never like to see a D point get completed by gapping into it with volume here. So we've got a couple of competing patterns out here. I'd say it's really important for PetSmart to hold this level. It's going to have another high volume bar, though, down at that area. Hard for me to tell you to. If it is a three-gap play, what we are likely to see is PetSmart will go ahead and make it all the way back up to the top of its resistance level right around January the 3rd out there. I'm not saying that's what's going to happen. I'm saying that's what would happen if this was a successful three-gap play. Let's take a look at VSAT. It's down about 4%. VSAT Inc. Don't know what they do, but let's go take a look at they're the second decliner dollar-wise to the downside as we speak this morning. VSAT is the ticker symbol. And let's go see what it is doing. Where looks like this is headed to some kind of a breakout session. Yeah, so this thing here had a nice breakout. Why? A couple of them. And that's where it looks like it's headed to. So it's had a nice breakout that actually began right here on the trading session of May 8th, 2013. It looks like that's where it's headed to. Now, the volume behind that move really about 725,000 shares. So far this morning it's on 143,000. So maybe coming down there just a bit too hot. It's got a ways to go. That ways to go is where you've got that open gap from May 9th, right around the $57 area. The $50 area, $50.69. You're trading at $55.40 right now. VSAT also looks like it's setting up a Gartley pattern out here. This thing really broke topside back on the trading session, really wide price spread and accelerated volume. Let me see what they actually do. Back on February 7th of 2013, had 1.8 million shares to the upside. And I'll show you the Gartley pattern, at least visually, that I see on my screen, that it is formed out here or is in the process of forming. These guys provide fixed and mobile broadband services, satellite wireless networks, as well as secure systems for the government and commercial customers worldwide. So the A to B equals CD pattern on this is the A point out here is March the 25th. That's your A point. Your B point is April 15th low at 62.03. Makes a retracement. Looks like a relatively short retracement, maybe in the 0.382 level out here, about a 50% retracement. Says more than a 1-to-1 A to B equals CD is likely. So that really is suggesting that price ought to get down and close that gap. Now, if we take a look at the retracement level off of the lows here, I'm going to use this high volume low back on August 3rd, 2012, up to that high that was put in. We're going to see here, I don't know what we're going to see. We're going to find out, yeah. So we're going to see the 0.618 retracement level at about $49.02. So it looks to me like that is where VSAT is likely headed to. And if volume can calm down coming into that area, and what I mean by calming down, I'd have to say you'd like to see it get underneath 700,000 shares out there. Maybe it ends up being a potential buy. Maybe somebody should put it on their list. Maybe I should put it on my list, and we just take a look at it later on as price moves down into that area. That ticker symbol, VSAT. Now let's go take a look at something moving here to the upside. Let's go look at that little blue box, see what we have going on out there. That's Tiffany's, TIF. Is the ticker symbol. It's up a nice 4% this morning, up $8 and change. Let's go see if that's running into any resistance, or is this thing taking out its highs out here with some volume behind the move. Let's take a look. How about that? Let me put this quickly on a monthly chart out here. Yeah, you've got Tiffany at all-time highs out here. Let's see here. Volume on its monthly swing point, July of 2011, was 32 million shares. Price got above that with 22 million shares, 20 million shares. So you got price above that area on light volume on its monthly chart. Let me see if on the weekly chart, did it get above a weekly swing point with volume? The weekly B point was July 22nd was 7 million shares. July 8th was 8.5 million shares. So, 7 to 8. What did it get above on the weekly chart? 10. Well, that's interesting. So the weekly chart has a confirmed A to B equals CD to the upside inside of inside of Tiffany. Let's go back and take a look at the daily chart and see what we see out here inside of Tiffany. Certainly gapping up here this morning above its swing point on the daily, which was March 6th. That had 1.9 million shares. Up above it already with 1.5 million shares. Things are looking up for Tiffany's out there, that blue box company. Dow's up 107, S&P's up 11. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now we've got the Dow's up 140 points out here. S&P is up 12. Composites up 29. Russell 2000 up $8. This market is a wonderful place, isn't it? It's got everything for bulls and bears out there. Now, during the break out there, I went and grabbed the current contract for light sweet crude, which is the July contract out there. And what I wanted to do was pay attention to the swing point that light sweet crude is dealing with here today, as well as as we speak right now. So in the swing point, and then go back and take a look at what the volume. The swing point, by the way, is April 16th. So I need to go back to the prior contract, take a look at volume out there. Volume on that trading session, which was a little doji candle. We saw two dojis. As we take a look at this contract, another one that occurred a couple days later on April 21st, and then the leaves fell off of the trees with a little bearish engulfing and a lower close on the trading session of April 22nd out here. Excuse me. And what we are seeing is that the B point, which has 138,000 contracts, April 16th, it's being taken out with volume. Well, it appears to be taken out with volume. Trading session's not over, but we're at 70,000 contracts thus far. So today, you get above 138,000 contracts, you'd have a confirmed A to B equals CD to the upside on the July contract. I'll take price to 105.48 as the range out there. So the next thing I was doing was taking a look at expansions of swing points. First, I was looking for a potential 3 drive to a top pattern, but I'm sort of discounting that at this stage. You see, in a 3-drive pattern, what you want to do is you want to make sure time is really a key element there. You got time, and then you have the Fibonacci expansions of swing points out there. Well, the time that we would be looking at would be from March 3rd would be our first drive. Our second drive would be that April 16th. And so if we take a look at that, that's 32 trading sessions out there. That takes us to June 3rd. And when I took a look at where that would have to finish in a price standpoint, we're not really that far away from that in order for that to happen. And I just don't see light sweet crude trading sideways in that range until June 3rd. So instead, we're gonna say that's not the pattern to look for. The pattern to look for is probably a butterfly expansion pattern. So 105.48 looks like the target here for light sweet crude. I'd have to say at 106.31. You get a 1.618 expansion. I'm also going to take a look at the expansion of the B to C swing point, see if we can find any conjunction of numbers that would come together out here. Yeah, I'm going to say that 106 area. So it looks like this. Looks like this is where light sweet crude is headed to. We'll draw in the butterfly pattern. We'll do it in advance, and we'll just continue to watch that. So 106.13-ish, 106.31 looks like the current pattern underway inside of light sweet crude. Let me get rid of a couple of these things out here just so we can clean that up on the chart out here. And it looks like that is, well, let me get rid of the formation tool as well. here is the butterfly inside of light sweet crude, and likely where it is headed to out there, about the 106-ish type area. And that's as we speak right now. You got the Dow's up. So let's go back, and we started off the show taking a look at the short-term time frame charts out there, the 120-minute charts. We took a look at some potential resistance areas for the Dow. Let's go take a look at the Dow here. You can see the ES Mini on that 30-minute chart. You can see that trend line still acting as resistance here, so it has not broken out of that trend. A break above that line, well, bullish versus bearish, but you can see right now price being contained there. Inside of the Dow, it's gotten up to the level here. That was its resistance area from yesterday. That's at that 12 noon time frame bar. Well, not yesterday. That was on May 15th. Hey, folks. I hear the music. It's the end of our day. It's the end of our morning, I should say, the end of our first hour. Have a great morning. I look forward to seeing you bright and early tomorrow. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.